What is going on, deal makers? Welcome to another edition of the Deal Makers Club podcast, where real estate investors, entrepreneurs, and wealth builders come to learn how to create, scale, and preserve wealth through smart deals. I'm your host, Johnny Lynham, real estate investor, advisor, and founder of the Deal Makers Club. After 2 decades in the Air Force and building a multi-million-dollar apartment portfolio, my mission is simple: to help you guys think bigger, move smarter, and to build wealth that lasts. On this show, we bring real conversations with real experienced investors, industry leaders, and operators to help you understand active deals that are working today and how you can close deals, navigate challenges, and build real freedom through real estate. And today is no different. I have the pleasure of having a great guest here from Houston, Texas, Mr. George Harrison with LWO Development. George, welcome to the Deal Makers Club. How are you today?
I'm good. How are you?
Pretty good. It's a pleasure having you on today. And I always like to tell people to kind of start off with who they are and kind of where they're from, and just give the audience a little bit of background about yourself and your LWO Development.
Yeah, so I started out in the subcontract world, concrete work, AC work, plumbing, and got into a lot of site work and different things for some of the bigger GCs. And we did work for US Builders and Suntech and a few others, even the city of Houston. And then we started building one house at a time and selling them because it was more of a passion to build homes. And then we were building duplexes and selling them and just other things. And then I saw how much money they were making. And so I decided to start holding on to it. And we started building more and more projects for ourselves. And so that's kind of how I got in the game.
Awesome. So how long has it been since from, initially starting off to creating LWO Development? So how long have you guys been in business?
Well, we've been in construction business since 91, and we started building homes around 1999. And we went full-time building homes in 2012 and kind of started getting away from the GCs. It was just, with the 60, 90, and 120 day pay from the GCs, I was funding their jobs anyway. So as well, if I'm going to fund their jobs, I might as well fund my own jobs and make the money instead of making somebody else rich, So, but we've been building commercial work or commercial projects, I guess the last 5 years.
Okay. No, that's awesome. How was it kind of going through that transition, which of course being a sub on that side of it and operating, were there any initial challenges with kind of going off on your own to kind of do the full development?
Well, so I guess the biggest challenge was funding. We have to get the experience. Banks generally won't lend to you unless you have experience in the industry, and we started out really slow with a duplex, and we started holding on to them, and because of the relationship we had built with the banks, they took a chance on us, and we were able to build on it from there, and we got into a commercial development, 18-acre commercial development, and that's what really put us on the map here locally, because everybody in town knows that project. It's in a really nice area, and it was in a really nice project, and city council likes it. The mayors liked it. And so
okay,
it helps a lot here in town whenever they see a nice project that you've done, and it makes things easier going forward, especially with permitting and everything else we have to deal with. So.
Most definitely. I was just about to say, when I heard that, I was like, yeah, having those relationships, I can only imagine, have been really instrumental with your success and the ability to streamline, going before you can go vertical and just streamlining all the soft commitments and everything that you have to get done on a project of that nature to kind of get that done. Has that really helped you guys to really hone in and really focus in on a certain area within the kind of the Houston, North Houston focus?
Well, it's really about, land is opportunity, right? So finding land that's suitable for the type of project you're wanting to build. And of course, you have to look at the marketability of it, your all-in cost on it and everything. So whenever we had built a lot of higher end homes, and we got really good at that. And then they started selling really slow. That's when we got into the production home market, and we learned how to build at a lower cost. And that's what helped us with apartments and things like that. That's when, we were able to scale because we knew what the prices were, because that's the biggest key, is knowing what the prices are.
Most
otherwise
definitely.
you overpay, and whenever you're building projects like that, it's all about unit cost, because when you sell the property, it's also about unit cost. So.
Okay. Can we kind of step through one of your most recent deals and kind of how it was set up, structured, and and really kind of on the investor side? I know you and I talked earlier, just with sometimes the investors have the options, whether or not they want you all to kind of lease it up and lead that side of it.
Yeah, a lot of times it depends on the appetite for risk, but generally we go into a project plan on having to lease it and stabilize it. And, we come from the spec home field, so we were used to building things and letting it sit till it's sold, and it's costing us money until it sells. Well, and we won't touch a project unless it's going to cash flow, and all that's planned in advance. So we basically we don't build properties unless they're going to make money. And then obviously we're not in a hurry to sell it because it's making money. The only thing we gain from it is moving on to the next project. So.
Okay. What's the typical apartment size that you all like to build, or kind of you would say?
Well, we build usually on the smaller side. I think the biggest one we built so far was 44 units. And we have a 16 unit. It's like a duplex park going right now in Huntsville, Texas. And, it's going to be a nice little project. We're familiar with the market there, so we know what our NOI is going to be at the end of the day. So.
No, I think that's tremendously important right now, especially in where we are in the cycle with real estate, how we've transpired with the increasing interest rates the last couple of years, that I know a lot of investors have really been, I would say, pencils down, that, the NOI and the cash flow has really been hampered with the run up in expenses. And I think you see it definitely on the material side. Insurance is a big one there in the Houston area that, from what I've heard with other operators as well, too. How have you all kind of worked to kind of navigate those costs to try to really maximize the NOI for your projects?
Well, we keep a group policy that helps a lot. And so we use purchasing power to keep the insurance premiums down. And, of course, property taxes are something that's been really tough here in Montgomery County. Some of the counties to the north have been a little easier to work with, and they haven't been real aggressive with tax increases. So, but Montgomery County's been pretty tough the last couple of years. But that seems to be the most challenging is property taxes.
Okay. And really, with the investors you guys work with, have you found them to be kind of local to Texas, or are you guys working with out-of-state operators as well, owners as well too?
Well, a lot of them are local, and we're local here. We build local, and we don't travel. We stay within 45-minute drive of Conroe, Texas, and because that's where we're based out of. We like to keep an eye on our projects, and so we're generally dealing with investors only on the sales side. We use local banks for financing, and so we're generally not working with investors on the front end. So it's pretty limited. They can, do their due diligence and look at the project. They can see what the NOIs are and buy it as a stabilized project, or they can buy it in advance of that for people who have a appetite for more risk. It's like a value add without having to do construction work, because you buy a completed project and you stabilize it, and that's where we can give people a little bit better discounts. We will sell things in advance, but we generally will not work with people on a sale until we at least have permits in hand. Because the value is, we plan for profit. In other words, we design everything based on what the marketability is, what the rents will bring in. Everything is designed and based on that from the beginning, from the concept all the way through. And the person that controls the pencil controls the cost, and it comes from the design work in the beginning, and making sure you're on target with your client. You're trying to get. It's you don't want to overbuild, but you don't want to underbuild. You got to build for the market you're trying to hit.
Most definitely. I know one of the things, kind of looking on your website, you guys are 1031 friendly. Tell the audience a little bit more about that and how you work with investors in that capacity.
Well, so since the project stabilized, and we can generally hit that window or allow a person to sell their existing property, and we can catch that window of opportunity on that 1031 exchange, because we're not in a hurry to sell it because it's making money. And so if somebody comes to us and wants to buy one of our properties, and they have to sell another one first, we can go and enter into a contract. And while they're marketing, selling their property, a lot of times we can even facilitate a simultaneous 1031 exchange. That way that money is always working. You close one deal and you close both deals at the same time, and your money never quits working for you. And that's the ideal situation. And because we generally have projects permitted in advance that we're ready to start working on, because we're working on permitting 6 months or even a year in advance to make sure whenever we sell a project, we can move straight into another one. So.
Okay. No, that's great. I think, as I work with a lot of qualified intermediaries and commercial owners. And I think that's one of the things, that 45-day turnaround to identify 3 replacement properties that a lot of investors, especially in today's market where there's not a lot of, I would say there's a delta between expectations of a lot of sellers and where buyers want to be on the acquisition on the front end. And so with that, a lot of deals, are kind of stalled out or haven't transacted. And so a lot of, if you're in a 1031, that clock's going. If you can't find anything that cash flows, that's a quality property, you could be at a real disservice, really rushed into maybe taking on a bad asset just to save on capital gain taxes. So I think that's a great ability that you all have with being able to work with a 1031 seller that may be looking. So I think for those listening, my investors that's listening to the show, you may want to look, if you're looking for maybe some exposure in Texas, in the North Houston market, maybe an opportunity there to do a 1031 exchange that may be worthwhile with getting a quality brand new asset.
Yeah, so the whole idea is to minimize risk, and also to keep your money working, because you can lose on the you sell a property and trying to acquire another one through 1031, or really by any means, there's revenue loss there that it's hard to make up. So I guess we're able to. What sets us apart from most people who are selling properties is that because we're the subcontractor and the GC and the owner, and we're using, local banks, so we're not having to share profits with an investor, we're able to keep the initial price lower than the market price. And the benefit of us doing that is we're really a construction company that learned how to work with investments and invest, in properties that make money. So.
Yeah, no, I think that's definitely a great asset, and that really sets your company, LWO Development, sets you guys apart from a lot of the other construction companies out there, because they're not really focused on the full ecosystem, and they don't understand how investors look at deals and the type of returns that they're looking to, are expecting to receive on a property. So you building with that already in mind puts you at a great advantage, and having the finance and having that streamline is only going to, allow you to create, a higher profit margin on your end and pass some of that along as well to the investor, which is always good. Kind of with the Houston market and, where we are in the cycle, are you seeing the market kind of pick up, or is it still kind of maybe holding steady there in your market?
So it's been a little slow, and I know, rental market has softened too the last month or two, but it seems like the last couple of weeks things has really started picking up. We've noticed phones ringing more for people leasing and buying. Okay. I think it was just some uncertainty with things going in the political world and everything. So
yes,
I think it really seems like the low points past us, and we're, really fixing to take off. But I think probably now is the best time to purchase, because the market's been a little bit slow. It's probably now is the time to get a good deal, especially here locally, because it's sentiment is generally a little lower when the phone's not ringing, and people generally people that are motivated to sell probably give you a better price now than they will whenever they have a lot of people trying to buy the properties. So,
have you all factored that in on kind of how you're looking maybe to maybe move out on permits that are approved, with actually starting to go in and like pouring foundations and getting going on projects?
So we have two projects that we're still working on permitting right now. We're in the middle of two fairly nice projects. For me, they're fairly nice. We have a 88 unit RV and boat storage right here in Bentwater, right at Bentwater, north of Lake Conroe, and then the 16 unit duplex park. We are looking to probably start our next project in September, because we generally only do 3 to 4 a year, and we try to keep 1 or 2 projects at least for ourselves. We have to sell some projects to make a living, because like I said, we're a construction company. We have to sell properties in order to realize an income to pay the bills. So.
Okay. Well, no, that's great. So for those that's listening, may be interested, 80 plus unit RV park site near Lake there outside of Houston, but then also 16 unit duplex project that they're about to go show ready. And like usually with that, what are the building timelines for maybe both of those to kind of educate?
Well, so we should finish the duplex park by the end of July. Okay. We started about a month ago. Maybe 6 weeks ago, we started that project. We already have 5 buildings dried in, and okay. We're working on the last 3. And so they are. We already have mechanicals, drywall starting on the first one. So it's moving along pretty quick. So because we're a construction company, we can allocate our own resources. A lot of times we're not relying on. Now we use subcontractors, obviously. We're only good at really good at a few trades, and we stick with just those, so, and I say that we're real strong in dirt work, all site utility work. We carry several licenses, plumbing, AC, irrigation, fire line, so we carry a septic license. So we carry licenses for it seems like the most expensive trades. That's the ones we do in-house,
Okay.
The ones that are, a guy can get in the business, with a pickup truck and a few tools. It's usually pretty competitive, and it's something we, like drywall or roofing, we use professionals for that type of work. So.
No, I think that's great. And really, I think a lot of times with being able to have that in house, it makes a world of difference. It's really the speed. You just talked about, you guys. You're gonna have that complete by July timeframe. That I think having that well-oiled machine is extremely powerful, and it goes directly to the bottom line with being able to be profitable, with being able to turn that product and get it out for sale and get it leased up to start generating revenue. For that investor that's out there, what's kind of the best way for them to maybe work with a company like yours?
I'm sorry, say that again. I think it cut out a little bit.
Okay, no, I was saying, for investors, that may be looking to purchase a property or something that you're building in the market, what's kind of the best way, for them to work with you all in order to kind of get in the pipeline for product?
Well, so like I said, we generally we find properties that are suitable for the type of project we want to build. And, we do all the due diligence and, all in the very beginning, early on. We won't generally work with somebody who has their own property and they want us to build on their property. We generally want to be in control of, all the planning, because that's where a bulk of the money's made, is in the planning stage. That's where, when you're looking at a property to purchase, since we know site work, we know drainage, we know a lot of the civil work that has to be done on a property and what it's going to take, we can look at a property within an hour. We know what it's going to cost us to develop that property. And even if we miss it by 10%, it's not a big deal for us because we're doing the work in-house. And so something that costs, somebody $10,000 may only cost us, $1,500 to $2,000, So every GC that, or a clearing company, or, anybody running heavy equipment, they want to make a couple $1,000s off of every crew per day. And so if it's a 30-day project, they want to make $60,000 in profit off of it, where, we have our guys that work in house, so that 30-day project doesn't cost us anywhere near the, that kind of money, so that's where we save. But the real money is saved on the planning, even the buildings, site work, buildings, everything, and having to, sites that are too flat aren't good because drainage becomes an issue. Too much slope can be costly. And so, you really have to know what you're doing when it comes to site development. And, it's hard to go into somebody else's site where the due diligence wasn't done and try to figure out problems or solutions to problems after the fact. You have to know that when you're, purchasing property. You need to know that during the due diligence period.
No, I think that's a great point. What are some of the mistakes that you're seeing, investors or builders that are making that's inherent to your area?
Well,
talk about drainage.
The 2 or 3 major mistakes I really see is not knowing the numbers. That's big. You have to know, not doing due diligence to begin with, and not following through or digging deep enough. And I've also seen guys do vanity projects, and vanity projects generally don't pay the bills. So you want to stay away from vanity projects. But that's really the 3 major mistakes I see developers make, and stay on top of the planning. Planning, that's why I say you have to plan for profit, plan, design, figure out solutions on the front end, and know what the numbers are going to be. And life gets easier. And I can tell you, I've seen a lot of developers or builders go in their project and they think they're going to make up for a mistake or something's cost them an extra $100,000 in the beginning, even during the due diligence, and they'll just figure I'll make it up somehow. And if the numbers don't work in the beginning, they're generally not going to work out later. It just doesn't work like that. And I've seen that mistake over and over again. And it's a mistake I've seen other people make, and I know not to make it. So.
Yeah, I think that's what they call wisdom. When you're able to learn from other people's mistakes, that goes a long way. And it saves a lot of heartache, money, and pain, I think, with that. Most people spend more time planning a vacation than planning what actually happens after a major real estate sale. I'm Johnny Lynham, retired Air Force Lieutenant Colonel, real estate investor, and financial advisor. I help commercial real estate owners and accredited investors navigate 1031 exchanges, passive income strategies, and long-term wealth planning with institutional level insight. If you're thinking about selling, exchanging, or repositioning capital, let's build a strategy that protects your wealth and creates freedom. Simply visit johnnylynham.com/call to schedule a private strategy session today. Kind of as we wrap up the conversation, what would you say, for maybe that subcontractor company, that founder or CEO out there that's maybe thinking about making the leap like you guys did some years ago? What words of advice would you give them?
Well, it's definitely a struggle on the transition. There's no doubt. And generally you're better when you specialize in one particular thing. In the years I would build a house or two or a project or two and still run a subcontract company. I made less money those years than I did. And, since you have to do one or the other because you're allocating resources. And even though it was, we really suffered for the first 2 or 3 years. I went into, the rental property market thinking the money was in the monthly income. And that is exactly wrong. The real money is in the accumulation of equity over time. And I didn't see a lot of money the first couple of years. In fact, I was pretty broke because we weren't selling properties. We were holding on to them, and we was actually holding on to too many properties. And it's hard to run a construction company when you're not, taking money to pay bills and, you got to have some income and revenue to spend because there's a lot of overhead in construction companies. And so, we still see that pretty much every day. We have to be really careful with how many projects we hold on to and which ones we sell. And another thing about commercial properties, people if they don't want it, they're not going to pay, a market price for it. They have to, you have to find somebody that wants the property. When you're selling spec homes, you can discount it. There's enough buyers out there. You can discount it and move it. Commercial sells a little slower. You have to, market it and get in front of enough people to where you get the person who wants the property. As if they don't want it, they're not going to pay a reasonable price for it.
Yep. No, I think you hit the nail right on the head with that. I think being able to kind of think who that profit line and how you're going to be profitable as a business is super critical. So I think that's great advice from George. And I, going through, and I think I want to definitely share the website for those that may be interested in reaching out and seeing some of the great work that George and his team are doing down with LWO Development. You can check out the website, LWODEVdev.com, and you can connect with them there and see all the great real estate that they're building. Some phenomenal projects from what I've seen on the website, George, and really salute to you all and everything that you're doing down there and continuing to make it happen. And so I think, as we wrap up this episode, that once again, I think it's great, really understanding for those investors that are out there, you want to have great people like George that are on your team, that are part of your team from the initial planning phase all the way through execution and lease up, because it's going to be critical to your success. So thanks again for tuning in to the Deal Makers Club today. Today's conversation, hey, it's a reminder that real wealth isn't built overnight. It's built through relationships, discipline, and staying in the game long enough to recognize the right opportunities. To George, thank you again for sharing your journey, the lessons learned, and the insight from the trenches of investing in real estate and really with building real estate from the ground up and everything you guys are doing. And for everyone just listening, whether you're on the closing on your first deal or you're looking to scale your portfolio to the next level, keep learning, keep building, and keep surrounding yourself with people who elevate your vision. I'm Johnny Lydham. This was the Deal Makers Club podcast, where deals come together, they grow, we grow, and we build lasting wealth.